Hi everyone, welcome to that live show where we'll talk tonight about the trading signal, which is basically step 3 of the pro strategy. So we're gonna dig a little deeper inside this topic tonight or today, depending on where you are around the globe. It's pretty late in here in France, but once again, I'm working hard to get you the best possible content available out there and for free, because no one has to pay to get that. Once again, the thing in here, the spirit with pro indicators is that no one pays for information. Information basically is priceless. So whether it's worth infinite pricing or nothing, and I chose it worth nothing. So you guys can get that for free, even though you're using the indicator or not. I really don't care. Everyone can benefit from what I'm sharing in here. Of course, as we will talk about the indicator themselves today, you might not find a lot of interest if you're not really using them. But anyway, you can trade through cycles, not really using my indicators. We're not necessarily going to talk about that today, but maybe in a separate video I'll tell you how to somehow use some parts of my strategy with different indicators. Of course, you won't have the signalings that I'm personally using, but yet you can still trade using cycles. Pro sine wave is not the only available cycle indicator out there. Of course, it's the best to me if you ask the question. But there are other options, of course. Anyway. Let's get to the essentials now that we've made that introduction. Of course, all we're going to talk about right now and in the following minutes is nothing to be considered as investment advice. Okay, I'm not going to tell you should trade or whatever. We're going to use real-time market examples in here because I hate backtesting or commenting things that already happened, because it's too easy and has no real value. A trader really assess what is about to come, not what already happened. Anyway, now that we've checked all the previous things I had to talk to you about, let's just get it started. So the indicators and the signals are really step 3 of the strategy, which means that if you forgot about checking step 1 and step 2 first before having a look at any kind of trading signals, then you're totally out of the strategy itself. Which means that if you are new to the indicators, and moreover, if you just got the invitation 1 or 2 days ago, you'll probably have the same reflex that everyone is having when it is testing any kind of indicator, which is backtesting, looking at the signal through time about what happened in the past, and see how the signals reacted, if they were good or not good, and you were going to judge the indicator worth or not worthy just out of this. And this is the biggest mistake you could make when you try an indicator. Especially mine, because these indicators has to be put in context, and if you put it out of context, it really is worthless, or at least the signals will not be the best you would have expected. Okay, it really needs to be checked first step and step 2, and then you get to step 3, which is the actual trading signals, because the trading signals might be really tricky to identify, and if you are really new to the indicators, this is what might sound the most Oscar to you, is the thing that sometimes bullish entry signals will come out of invalidation of bearish signals, which means that sine wave, the problem mostly comes out of sine wave. The fact that sine wave, you have to remember that this is doing predictive analysis. It means sine wave is trying to predict what the market could reverse, and as by definition the market is unpredictable, you can never ever have 100% reliable sine wave signals. Most of the time sine wave will be in timing, but let's say it's happening 60% out of 100. And 40% of the time, sine wave will be wrong in timing. Not meaning that it is wrong about the cycle it highlighted, but it will be wrong in the precise timing. Meaning it will trigger too early or slightly too late. And in order to somehow deal with that delay, sometimes the signal will be triggered by delay, and you won't have no choice because you need to have those signals to trade. If you trade out of signals, you're simply forgetting about step 3, which means you introduce heavy risk inside your trading. The step 1, step 2, and step 3 have individual risk management that help you having the best possible strategy when you check those 3 steps. Okay, forgetting about one of those 3 steps, either it's step 1, 2, or 3, it really is limiting or narrowing your risk management, and which means that you introduce risks whenever trading is reducing the risk. So you might want to check those 3 steps and make sure you've done that before eventually just trying to judge on the indicator signals themselves. Okay, so if you basically tell yourself that, okay, this indicator is not what I expected, it's far less better than what Phil sold it, okay, because when you use it, it seems like a magical thing, and when I try using it, or when I look at the signal through time, they're not really relevant. Okay, so when you do that, you just made a mistake because you simply had a look at what happened in the past, not putting this into context. Okay, so first mistake most of you guys are doing is just trading the signals out of nothing, and really it is a big mistake, because consider the 3 steps as 1/3 of risk management. If you miss one, you simply have only 2/3 of your risk management potential. If you miss 2 steps, then you're basically just managing 33% of the risk management you could have if you respected the entire strategy. Okay, so that second introduction is now checked. We're going to switch to technicals and actual trading signals, because this is what this show is about. So once again, I'm going to take a couple, let's say 3 to 4 examples, which I think could have educational content. We're going to use the same as we did with the French users. And then I'm going to take your questions on potential signals you might be having trouble to read out of your indicators. So for example, if you're trading an asset, you will simply have to post in the general channel the asset you want me to analyze, the time frame, and the timestamp of the signal you had trouble dealing with. Okay, and simply I will get to this and I will try to make a lecture out of it and see how I would have personally interpreted the signals. So yeah, I'm gonna mute the microphone of someone who is having kind of echoing. It's you, Ivans. Okay, it's just muted. Okay, we're good to go. So we're using this that we found with French users that requested me to do this, and now we have something really interesting in here. Okay, so as you can see, first thing you need to have a look at, okay, is making your analysis. Okay, so first thing you zoom out, you see what nice bearish trend. So this asset is bearish trendy. First things, so first thing you do, you put the retracement levels. Okay, you consider this as a bottom for now, and you put retracement in there, just to have a look at how deep you retrace the major framework. Okay, so you put the basic standard retracement levels. Okay, so we're below 23.6%, which means we still have bullish potential on that retracement. Okay, now you have a look at the technical framework. Do it really fast, because once again, this is not the topic in here. I'm not going to explain how we build this. Okay, so basically to me, we have a 1, 2, 3, 4, 5 terminated count in here. 1, 2, 3, 4 terminated 5, and we're good to go. Okay, and we could eventually have even 3 and 4 there. Okay, with the dynamic force retracement, and we go out to the 5 to the 5th bearish impulse, or we can consider making this. Okay, terminating the 3 in here, and having the 4 on a kind of a range flat pattern, and terminating 5. Anyway, I think the wave kind of is nearly terminating. Then we're gonna do this. Okay, to have the technical channel for the targets of wave 5. Out of wave 3, so we can see we're trading currently a technical level. Okay, so this is regarding the technical analysis I've just done. We are trading currently a level of interest. Okay, a price of interest. Now we have a look at through time of what that price triggered back then, and as we can see, we had bearish signal and we had a bearish confirmation out of momentum, which means that right there was a resistance. Sine wave, once again, you see triggered later on, but there you have a resistance. So we have chartist resistance in here. Okay, we've got dynamic resistance out of that trend channel, and now we also have the technical information out of sine wave, which highlighted a possible breakout, but put the target right here. Okay, so we're basically testing the target of a potential bullish trend, but from what we can see out of our technical framework, there's very likely, less likely potential to have a bullish breakout right here for many reasons. First of all, we already had the breakout on that wave, and you don't break two waves. Okay, you only have one extended wave in a wave count, and generally is wave 3, could be wave 5, but you won't have two breakouts in a single trend. Okay, it's really rare when you have this, whether the asset is really heavy trendy, which I think is not the case in here, because we saw that we will be in potential retracement. Okay, so very less likely to validate that breakout, which means that this probably is a resistance as well. So yes, in here you have a trading signal, but you have a trading signal, a potential trading signal, and it's high risk. The fact that we are in a potential bullish breakout, so you will be trading against a breakout. So this is heavy amount of risk, but you have lots of things in the context that tells you that that breakout is probably false breakout, and you can consider this as a short entry. It is yet very aggressive, means that you need to lower the leverage you could do in here, because once again, the overall trend might be bearish. The current trend on the current time frame is bullish, because we had a bullish impulse, which means that what you can expect out of this is simple retracement. So what you can do right here is now putting the retracement out of that bullish impulse. Okay? And you're going to target those retracement levels and see if you have technical support suggesting one might have more chances than the others. So where do you have support? Right here, you got a first support, you've got a bullish cycle, and you've got squeezing momentum. And the squeezing momentum is a confirmation signal when you have a breakout. Okay, so when you have a bullish signal, squeezing momentum, and then you have a bullish breakout, there is bullish support. So we've got a first support in here, so potentially finding support near 38.2% retracement. This is what we can see for now. Okay, so right here, potential support. Number 1. Okay, so we've got the interesting price area, we've got a potential signal. Now we're going to highlight if the risk-reward ratio is interesting or not to trigger the trade. Okay, so first support is in here. As we are retracing, this is our maximum target. We never target below the supports whenever you trade. So this is maximum target. Okay, so basically entering right here, the higher the better. So for now it's really risky. It was really good to enter right there on the signal, on the technical area. So it was basically making an entry right there, right here, with a target right there, and having to put at least 1 to 2 risk-reward ratio, means that your stop loss has to be right there. And you can trade this, okay, no problem, no questions asked. If you are low risk profile, you trade 1 to 1. It's retracement, so this is really low risk, and you trade 1 to 1. It really is simple. Whether the asset is really breaking up, and it's going to break up that trend line and take out your stop loss. Option number 2, we stick inside the range, retrace back to support, the profit is taken. Simple as that. Here is a trade you could take out of a signal in here, and once again, you can trade out of double bullish signals and take a bullish entry, but you can also trade out of bearish signal invalidation, and in that case, bullish signals invalidations. We have that breakout, we have low confidence this could really install a trend, as the trend has already installed itself, which means that in here is probably a bullish trap, which means you have the highest level you could trade, and once again, sine wave gave it to you. And as you can see, the price went perfectly reaching out to that target. So I think that asset is slightly bearish, but it's a retracement bearish, so that asset is probably about to trigger an ABC structure pattern retracement, which now we made 5 wave upward, so probably have done A wave in here, going to do a B wave in 2 wave, probably going to find a C wave, potentially to 38.2 retracements. Okay, I don't do timing, so generally the C wave is same timing as wave A. We could have something like that. Okay, retracing 61% retracement, which is the general retracement we have on a B wave. And as you can see, we have a support right here, double signal. Okay, momentum is not giving a signal, but beware, you have a signal right there on the oscillator's cross, but moreover, you also have a very nice hidden bullish divergence in here. The momentum went way below the previous low, not making new low on the prices. So right there, hidden bullish divergence. So it means we have support in there as well. And you can see B point is very likely going to reach out that price. So you can take that trade knowing that this is retracement, and you know that we'll probably make an ABC structure like that in order to get to the B point. Okay, so that trade has to be taken in 2 times. First time in here is about the support, and probably here we'll have a double bearish signal. Okay, so in here, bearish signal out of the false breakout, and probably at the B point having a double bearish signal in here that will push us right there, where you will probably find a taking profit pattern or bullish pattern that will tell you to reactivate on that support. Really is that simple. Not complicated. Once again, you simply put the technical framework, wait to have the signal in there, and if you don't have bullish signals, you wait to have bearish signals invalidated. Really is that simple. Then there was a question out of the French guys, and I think you might have the same concerns, so I'm going to answer that question before you even post it. The fact is, sometimes you might consider trading just one of the indicators signaling. It has to be at least sine wave. Okay, you never trade bare momentum signals. Okay, you really need to, if you want to trade just one of the 2 indicators, you really need to have at least sine wave confirming somehow, or at least having the sine wave oscillator reaching the end of the cycle. Okay, so somehow you can predict what sine wave is very likely going to do whenever you have this oscillator on your charts. Okay, let me just merge it down so you'll see it clearly. Okay, so whenever you have, for example, in here the momentum oscillator inside the overbought area, means that we're probably reaching the end of a bullish cycle. It means that if you have very high confidence, if you have a bearish signal on momentum and you absolutely want to trade bearish, you can consider making an aggressive entry in here, but you have to know that those trades are way more risky than having the double signals. When you have the double signals, you have the highest possible risk management you could have. If you trade with only one of the 2 indicators, of course, more risks, which means that you will have to use other leverage to reduce that risks. So either you reduce the amount of the trading size of the size of your trade, you reduce the trading leverage, or for example, you can tighten the stop loss. Okay, which reduces the risk, the loss of in a potential invalidation. Okay, these are the many things you can use in order to reduce the risk accordingly to the increasingly risky trade you are taking by entering with just one of the 2 indicators. Yet, once again, it's still possible you can trade with just one indicator. But once again, make sure you put the risks, you reduce the risk to the minimum, and then take the trade at your own risks and adjust the money management to that underlying risk if you accept to take more risks. But the goal in here is that whenever you have step 1, step 2, and step 3 cleared at the highest risk level management, you generally have a very nice probability to have a winning trade. Really is that. And once again, it's on the long run. So if you take on a trade-to-trade basis, somehow you can make 3 trades losing in a row. But if you take that out of 100 trades, you should have way more winning trades than the losing ones, if you respect the whole strategy in the 3 steps. Now, if you flush out one of those steps, once again, you might need to know that it puts some risk inside the strategy, which means whenever you let the risk to getting in your strategy, you introduces risk to increase the losses. Okay, and whenever you do that, it's not really what you want to do in trading. You want to have the highest possible risk management. Okay, so we're going to take a few other examples because we're not going to analyze the ETH.
I have a quick question. What if the indicators conflict each other in different time frames?
Yeah, interesting question. I wish the French guys asked it, because that's the question I have really often, and we're going to cover up that answer right now. First thing first, you must never, ever analyze 2 close time frames, which means that look at what I'm looking at. Okay, I'm taking care of 2-minute time frame, 15-minute time frame, 2-hour time frame, daily time frame, weekly time frame, 3 months time frame, and nothing in between. I don't even care about what's happening in between. And neither should you. You need to select a few time frame you will trade on, and you simply need to respect at least a 7 to 10 spread, 7 to 10 times spread between the two time frames. Which means that, for example, when I have 2 minutes, 15 minutes, I have a 7.5 times spread. It's okay, but less than that is not possible. So it means that if you're trading 15-minute time frame, anything that is between 15 minutes and 2 minutes, you don't have a look at this, because it's too close, and the only thing it will do is to confuse you with giving you opposite signals. And remember, once again, the most important thing is not really to give to have the best signal and have the indicator that is going to give you all the swings, because that's not how it works. The indicators are not meant to do that job. It's not meant to tell you where the market will reverse. It's only there to tell you that if you highlighted that price, if a signal shows up near that price, then probably the market saw it as well and is probably trading it as well, which means you put all the odds in your favor, but that's all you have to take care of. It's not putting a trade and instantly having a look at other time frames to see if you were right or wrong. You can do that, but only if you respect at least 7 to 10 multiplier ratio between the two time frames you're having a look at. Anything in between is not to be compared to. Because, for example, even here I'm trading 2 hours. If I switch to 1 hour, I may have opposite signals. But you can never combine those two signals. They're really too close one to each other, and if they contradict each other, it's simply that you had a look at something you shouldn't have had a look to. You pick one time frame, can be right, can be wrong. Once again, trading is not about that. It's not about being right or being wrong. It's simply limiting the risk and trading. And then the market decides if it gives you a gain or a loss. But when you reduce the risk, you'll have more gains than you have losses. And the gains will give you more than the losses will cost you. And this is the only statistic advantage you can take in trading, and that's the only difference between a gambler and a trader. The gambler simply plays out of nothing, out of luck, and everyone can have luck and bad luck, but that's not something you want to rely your living out of. You want to make a living, something that is consistent through time, and this is where trading is different from gambling. Because I don't give a shit about being right or wrong. All I want is to reducing my risk and placing my trade and repeating the same action as much as possible. Because I'm taking advantage of a statistical advantage, not just a luck advantage. As once again, when I have confidence in my Bitcoin trades, I don't even know if the Bitcoin is going to break up or down, and I don't care. All I know is that my strategy is giving me step 1, step 2, step 3, I'm trading, point. Could be right, could be wrong. Once again, if you judge on a single bet, this is betting, this is gambling. If you want to learn about trading, judge out of 100 trades. But you have to respect the same framework on those 100 trades. And this is what a trader does. It basically replicates the same schematic through time and different asset whenever the configuration is applicable. I don't know if that word exists. Is applicable, maybe? Okay. So I kind of finished my presentation in here. I'm going to now take your questions. And if you want to see other examples, first we're going to take care of one another asset that is really tricky at the moment, which is the gas, natural gas. It's really tricky asset for now. Lots of bullish breakouts, bearish breakouts, never managed to validating each and every one. It really is complicated asset to trade. So we're going to take this one as a really tricky example before we take your questions. So once again, you can put the assets you want me to analyze, asset, time frame, and timestamp of the signals you had troubles reading. Okay, so now let's get to work. When you have this, okay, technical framework checked on a very simple manner. So we had that bearish trend channel. We exited it by the upside with that nice bearish bullish breakout. Everything has to be validated. We had all the elements confirming a potential validation in here. So I think we're very likely having a wave 1 in here. And I would very much like to have a wave 2 terminating in here, not breaking the low. So this is where I have my stop loss basically. If we go below the break target and below the previous support, because we have a nice support in here. Okay, once again, taking profit, bullish signal, you take the candles that reverse the trend. This is where you have a support. I don't want to have that support tested again. The price should never retrace the support out of a wave 2, okay? And generally, and even less whenever you had a breakout on that momentum, okay? So that bearish breakout needs to be invalidated, and if you got my point, what is going to be the breakout invalidation? It's going to be a bullish confirmation, okay? So right there is where you have the bullish confirmations, okay? Right here, this is the price that got broke down. See, accumulation, and the market broke it down. So here is your resistance. So now, whenever the price switches back to resistance, I'll take my stop at break even, which means I'll reduce my stop loss to the entry price, and then I'll have bullish breakout. I mean, right there is where the bulls are taking control. We tested that resistance in here. With that resistance, it rejected downward, okay. But if we don't break the support and we get up to the resistance once again, there is no more blocking in here. There's no more resistance, which means that the gas will go crazy high because there is nothing to block it. Okay, and if we zoom out, if we take care of the context, when you see this, you see there is no resistance in between. We have one tiny little resistance in here that could block the price, corresponding to the upper channel in here, but we're very likely going to break that up. And as you can see, resistance here, tiny resistance here, and if we break that one, nothing until there. So there is really high reward, potential reward on the ENG gas. Okay, it just has once again to be patient. We really need, we need to have sine wave confirmation. So as long as we remain above this, we're good to go, I think, because the momentum is confirming a potential bullish reversal. All we need right now is the price to go up and break the resistance. Okay, so I've been trading by anticipation in here because we were back on the trend channel, and that's the only reason I've been taking that trade. But the price went slightly lower, no problem. Now all I care about is the price to retracing above my entry price, reaching out the resistance, not breaking the support. And if we do that, I think we're good to go for a nice bullish trade. We'll have wave 1, wave 2, and nice big wave 3 on the row. What we'll do in here is simply building then a trend channel, because once again, if we have extended wave 3, and we're very likely going to have it regarding the trend channel we're building right now, which means that if the price go there, I put my stop at break even, and I'll consider making bullish breakouts in here, okay? Because when we reach out to that trend channel, I think we're going to break it up and probably going to extend the range of that channel to the upside, reaching out to target number 2. Really is that simple. Simple technical analysis. We've got target number 2, as we can see, we had resistance back then in here. This is the price you want to take your profits on that trade. Really is that simple. Nothing complicated in trading. Really, taking care of your context, taking care of the technical frameworks on your local time frame. What you want to see right now is the price breaking up the resistance, invalidating that bearish breakout, and then triggering a bullish signal as in the meantime. And if we do have that, then that trend channel probably is going to be broken by the upside on a third very trendy up move, which means that entering right here could give me 10% gain, easy gain, if the market is good. But of course, it's at the cost of a potential 2% loss. Once again, trading is just about that. I don't know if the gas is going to go up or down. All I know is that I have a technical framework out of a context with a potential trading signal, and I'm going to take it. I traded aggressively for now, which means that I'm still low leverage, but I'm going to put leverage if we invalidate the breakout and go find the resistance again. All right? Really is that simple. I traded simply because I had momentum signals back then. I was on a technical level. I bought speculative without the sine wave signal, the exact same example as we talked about before. So what have I done? Low leverage. Really simple as that. No, I haven't put the leverage on that trade simply because I need to have sine wave confirmation somehow. But whenever I'll have it, you can be sure I'll be putting leverage in here. Okay, I think we terminated. The goal in here was to take hard signals. Once again, sometimes you'll have really clear and clean signals, and that's the best case scenarios. But once again, in here, I wanted to dig a little deeper into tricky scenarios, tricky signals, and these are the most tricky signals you could have, because dealing with the breakout pattern is really the most complicated signal you have on sine wave. Lots of you guys are misunderstanding those, so this is why I wanted to make a focus on those today about the trading signals. Because despite that, simply trading, taking profit that has a bullish confirmation on momentum is really easy. You just highlight the support, pay for it, put the stop loss below, and let the price go up. It really is that simple. There's nothing complicated in here, but somehow the breakout pattern are tricky to trade, and this is why I made a focus on those today. So now that I treated all I had to talk to you about, I want to have your own questions, because I'm trying to anticipate the needs you might have in terms of technical perspectives and educational content. But once again, I really don't know for sure what your needs are. So please share with me if there's anything I've been too foggy about or anything like that. Don't hesitate to jump in, take the microphone, or write it down, and we'll talk about that. So I'm going to take the examples you've been putting right there. Give me a minute. Okay, this. I'm trying to find where we had. Okay, stochastics. No, we're not going to take care of this. Sorry, nothing about that. Anything else? Oh, okay. If you, I got some kind of the questions that I fastly read. If you want to replicate my momentum, it's hard to do simply because my momentum is a trick between. I don't know how to say that word in English. It has boundaries. It means my momentum is oscillating between 100 and minus 100. The only oscillator that is doing this is the RSI. But if you put an RSI, you'll see that the difference are really huge. Really, really huge. I really don't like RSI. And as you can see, RSI is really brutal. You got a lot of spikes and things like that. I really hate that momentum. So the closest thing you could get is called TSI. It's True Strength Index. Okay, I bet it is right here. Okay, you got True Strength Indicator. It's called that way. Okay, it's as close as possible as you could get from a momentum, but once again, as you can see, it's really slower than momentum. So there's nothing compared to my momentum, because this is why I've been building that momentum. I simply didn't have what I wanted for a momentum. I wanted something fast responsive like the RSI, but not as violent as the RSI, and I wanted something with smooth visualization like MACD or TSI, but with faster response. Because as you can see, TSI is going down in here, and the price has moved up. What's happening? The price is moving up, the TSIs keep going down. It's not normal to me. So once again, I wanted to have something that moves following the price. Okay, if the price moves up, my indicator is moving up. It really is that simple. You cannot have the opposite. Sorry, I'm gonna move downward, and so AUD NZD 1 hour time frame. Okay, either wave, but I would like to have a timestamp of the signal you are talking about. Or if you say nothing, I'll assume that you're talking about the latest signal available. Okay, so we're gonna switch to AUD NZD on H1 time frame. Okay, once again, very nice trade. I've been trading this one hard, dip the ground to the bones. Okay, so 1 hour chart time frame. What do we have on upon signals? We need to get some time for sine wave to work this out. Whoa, taking quite some time tonight. Okay, so on this, as you can see, we have bullish breakout in here. We have no breakout on the wave 3. That's a condition. It was really needed in here not to have the breakout in here, otherwise it would be in the same case as we saw earlier on the ETH BTC cross. So okay, good to go on this, which means that we should probably have one more push. Okay, what do you want to see on the bullish breakout if you want to see it validated? You want to see price moving up towards the target, reacting at the target, then pushing below the target, beyond the target with the divergent momentum. Okay, so basically in here you have all the ingredients of a sorry, I can't find my words. I'm so tired. It's a validated bullish breakout. Okay, so you still need to have the bullish reactivation pattern towards the taking profit, but from what I can see right now, all the possibilities are triggering that this is the most viable scenario in here. Waiting to have two waves retracement, finding a bullish reactivation, and then we should probably have a final push towards a TP or exit pattern. Okay, so the wave 5 might not be terminated yet. At least we need to retrace back to the breakout level to make sure that we found the top. So for now, the top is still pending. Very low probability to be a top in here because we made a divergent momentum, but in a bullish breakout, which is totally normal. So for now, we're probably retracing, trying to find some bulls in here, and making slightly higher high after that is the most probable to me. Okay, see Watson, this is where you want to ask your questions. Just type them right here. I'm gonna read them in. Difference in signals between exchange from the same asset. Yes, okay, that's another tricky question. Because yes, of course, there's multiple BTC charts, and sometimes some of them might give you different signals. So that shows you how precise sine wave is, because simply changing a few parameters inside the candles, even though you're looking at the same asset but not the same quotes, and then therefore not the exact same candles, can vary a lot from the outputted signals. And to answer that question, first let me give it a sip of water. To answer that question, you need to be aware that the answer is basically what we've said earlier, is the fact that as you need to have a 7 to 10 multiplier ratio between two time frames you might have a look at, then having a look at the same asset through different quotes is not a good approach in here as well, because you're doing the same mistake. You're trying to see and you're trying to introduce doubts inside your strategy, as the strategy rules are really simple. If you have checked your context, know that you can buy or sell, if you found a technical frame that suggests you are in an interesting price area corresponding to that scenario, and if you have a trading signals, there's no other question you might ask yourself before placing a trade. You simply place the trade and let the market do the rest. Can be right, can be wrong, this is nothing you care about. All you care about is simply replicating the same thing throughout the same conditions through time. Because this is what trading is about. If you have a look at other quotes, just to make sure that there is no contradictory signals or things like that, you're simply introducing risks inside the risk management. You don't want to introduce risks, so don't have a look at what's happening on other quotes. Just choose one and stick to it. I've been choosing Bitstamp, and I don't really know why. I bet this is because this is the one that I've been put it in front of me as a first choice back then, and I stuck to it. I never change it. And if you change, or if you have a look at others when you trade on one particular quote, you're doing a mistake, I think. This is just, the question is interesting, but the answer I have to give you is really brutal, because there is no much option in here. You really have to consider this that way. Don't look at all the quotes. Pick one and stick to it. And if your focus is made on in which quote you will have the best signal, you have to know that from time to time this will vary. On day 1 you might have better signal on Bitstamp's quotes, and on day +10 you might have better signals on Bitrex. because that's not where the magic happens. What makes you more gains than the losses you could have is not the indicator itself, it's not the bear signal itself, it's the indicator included inside the strategy. This is where you need to embrace that thing as a whole, okay? Because this is what I've been trying to teach you guys for quite some times. What you need to work yourselves around is not the indicators giving perfect signals, neither finding the perfect technical framework with crazy difficult Elliott wave counts and things like that. It's not where the magic happens. The magic happens when you master the strategy in its whole. When you take care and you precisely check your first 3 steps. Okay, don't spend an hour making your technical framework, and don't spend an hour trying to find a signal. It's not the point. It needs to be simple, but you need to embrace the whole thing, not just taking hard times for overheating your brain into one of the 3 steps. Okay, really is important. We're gonna make. Sorry, yes. Anyone wanted to talk? I think I heard some echo, maybe.
No, but I will. What was those blue and red crosses again on momentum?
Oh, okay. So let's set this straight. First, I never wanted to release that indicator. Okay, so that was a mistake I made. Now I have to stand on this, so I cannot back up because TradingView is not allowing me to delete the indicators once they got posted and shared to the public. I asked the support to remove them. They said me, okay, no, we can't, so you have to deal with it on your own. So I said, okay, so I'm gonna simply stand on what I done, and basically this is just consider it very early beta kind of feature. This is just an idea I had, and I wanted to see how it reacted. So I basically started to create and code some kind of algorithm and went to back test it. So in order to, before I push an update to you guys, you have to know that I've been testing this for weeks generally, at least a week. That's the minimum thing. I'm using a new algorithm before pushing it to public. So this is why sometimes you will see some different signals on my charts than yours, simply because I'm testing probably some kind of potential improvements out of the algorithms. That's one of the possibilities. You and I might have different signals, but once again, the signal itself might differ, but that's not the real point. You might have the signal somehow, even though it's not the same. You might want to, I might trigger out of a double bullish signal, and you might eventually just trigger out of a bearish invalidation, but somehow you'll get the signal. The indicator cannot give you a wrong signal too long. Can be wrong about the timing and can differ from 5 to 10 bars, but somehow you need to have the signal sooner or later. Okay? You want to make Ethereum analysis on H1 time frame. You mentioned that an invalidated bearish signal can be a bullish signal and the other way around. Yes, indeed. Is this possible on BTC if it trades a little bit higher to the red bearish line? I'm asking this because we had 4 bearish signals in a row on a sine wave since the last bullish one. Yes, okay, we're going to make that analysis on the Bitcoin 1-hour charts. So I'm basically using 2 hours right now, but we'll get back to you. No, we're on H1 time frame in here. Give me a time to have sine wave plotting the charts, and we'll make that review. So your question is, so it's not just one, will the invalidation theory still be valid? Yes, we're going to talk about that. So from what I can see in here, we got just one bearish signal out of sine wave, and to me it's totally valid at the moment. So you basically just take all the wicks you have above the reactive signal. We got bearish, got confirmation right here, so this is where you got the confirmation. Okay, still need to have a red triangle to make sure the price is reacting to this, but yet we have a bearish sine wave with a bearish momentum confirmation in here. So for now we just build a resistance, and guess what, we've done that resistance below the previous one and below that trend line that I have highlighted. So for now, everyone is buying Bitcoin, and I think it's very likely going to break down. So you cannot trade for now. Now, can someone give me the reason why you cannot trade right now? You cannot take a short trade, aggressive short trade right now. There is one tiny reason, and I bet you guys will forget about this. Because this is one of the core rules of the trading signals. Remember, the trading signals rules are not complicated, but there are a few rules you need to respect. What is the rule that prevents you from trading right now? Yes, Mika. Very well. Very good answer. Because we have a squeezing momentum. You can never trade out of a squeezing momentum because you don't know what the outcome will be. The price is simply too contracted. The momentum is as well, so you basically wait. Right there we have a resistance, but in order to have it validated, we need to have a bearish breakout. Okay, it means that we want to see the price breaking the bearish trend line, a trail line, the bullish trail line, and keep moving below. Okay, we want to have the momentum reaching out to oversold area. Whenever we'll have that, we can validate that as a resistance. We could be able to lower our stop losses as sellers, and we'll be able to place reinforcements. But for now, we have to wait. Somehow we built a resistance, we have a double bearish signal, but the squeezing momentum is preventing us from trading in here. We have to wait. Cannot possibly trade that right now. It's really way too risky. Otherwise, you can take it, but you have to put a very, very low leverage and a very large stop loss. What that signal is telling us is the fact that right now, either if you're a buyer or a seller, you need to put your stop loss further away. Okay? So for now, for the sellers, if your stop is right there, really dangerous. Because remember, the squeezing momentum can do this and this afterwards, and yet the price reaction will be bearish afterwards, but you will have been stopped out on the market top. And you don't want this to happen. So the only thing you want to do right now is the squeezing momentum is preventing you from trading and telling you one simple thing: you need to reduce the risk by not removing the stop loss, but putting it further away. So any stop loss right there is not possible on the Bitcoin. You need to put the stop loss at least right there. It's just 8,800. Right there is totally out of limits of a squeezing momentum. If we go up there, it means that the squeezing broke up instead of breaking down, and in that case, we'll be triggering the stop losses. Really, it's that simple. We can highlight the resistance we have up there. Once again, we have a very strong resistance in here at 8,600. Okay. So if the price is reaching that resistance and going down, you would have triggered stop loss for nothing. If you put stop loss right there, the price could go there, retrace, fail, and break down. And if you have that, you're good to go. It really is that simple. It's only, once again, assessing the risk. If you want to trade that squeezing momentum, the stop loss has to be placed above 8,800. And if you want to trade it with a bearish signal, you need to wait to have a clean bearish breakout, and then we'll follow through. Really simple as that. Sorry. Yes, this is recorded. You'll have a replay out of this. We're going to terminate the show right here in let's say 5 to 10 minutes tops, because I don't want it to last more than an hour. But thank you guys for being here. I'm going to take maybe one or two last questions if you guys have ones. But we're going to stay there. I basically shared what I had to share with you today. We kind of talked about the signals, the essentials about the signals, mostly talking about the bearish breakouts, which is the hardest one, and now simply waiting. The recording will be available in the YouTube channel. I'm going to get the link for you guys. Basically, this is there. So you go to your favorite search engine. I'm going to tell the name. You know, the one I'm probably using is the same as yours. You put simply YouTube Pro Indicators as a search, and you should probably get to my channel in here. Okay, so this is it. Pro Indicators YouTube. You go there. And there you have it. You will have, I've been creating playlists. So you have live room replay in here. You got both the French and the English replays all in the same place. Okay, but basically you go there and you'll have the replays. There you have the one we made with the French user last week, and we'll have the two we've made today, the live room number 2 with the French users, and your first ever live room in English below in here as well. So we're done, unless you have other questions. Yeah, that's recorded. Yes. That's the goal in here. Lots of the people in here cannot be able to handle an hour before in front of their computer, or some people might not be there in the right timing, and of course they deserve to have access to the same educational content. Nothing on XRP USD. Yes, we're going to take care of this one to terminate that show, and then we're good. Okay. Go dance show. If I have a more important question, I'm sorry, Ad, but we're not going to do that. I really like to talk about educational content than just making an analysis for you guys. I'm basically doing this every day, and we have shows on Tuesdays, which relates to technical analysis, in which this is the goal, to analyze the things you might want to analyze, that I not usually do. So keep that the XRP for the Tuesdays analysis, Ad. Can you look at BTC chart, please, 4-hour chart? Yes, but once again, this relates to the question we had before. If we just made an analysis out of H1 time frame, looking at 4-hour is totally irrelevant. You pick one and you stick to it. Okay, doing the analysis in 4-hour time frame right now would be a mistake. I know you might want me to do it, but I can't, simply because that will be confusing. I just tell you what the release, what the conclusions are on the H1 time frame, and reading out of H4 might be a different answer, and I don't want to have you guys confused in here. Pick a time frame and stick to it. We just picked 1-hour time frame. We don't have a look at 4 hours. Talking about the RSI divergence, okay, so first, momentum divergence in here is not RSI divergence, not the same. My indicator will plot a lot more divergence than the RSI will. But basically, there are a few rules you need to respect if you want to trade that's an interesting question, so we're going to take 5 minutes to answer this one, and then we'll terminate. So the rules you need to check first if you want to validate any divergence. Either it's a hidden or standard divergence. Sorry. So the rule is never ever the price should be on the same price level. Okay? So you need to have two resistances. Let me highlight the thing. For example, in here we got resistance number 1. Okay? Resistance number 2. Okay? You might want to search for a potential divergence after the price tested the first one and then the second one. If the second one is divergent somehow, you might want to trade it. You have another resistance in here. There you can validate the divergence. Okay, so between there and there, you have bearish divergence, and that divergence is valid. Okay, you can trade that, you can consider that as a divergence, because the price tested two different resistances, tested the first one, tested the second one, and the momentum is reducing after testing those two, which means that bears, or at least there was sales who lowered the price momentum. Okay? And that's what we call divergence. But a divergent momentum only means one thing, that there are sells or buys executed, but buys and sell could very well be just taking profits, and that's generally the case. When you see divergent momentum, it's just generally people taking their profits, and not really, it is not really a reversal signal. It more likely is a taking profit signal, the divergent itself. Okay? So first rule, you need to make sure you're trading two different levels. The market has traded two different levels between the two different picks. Otherwise, it really isn't a divergence. And moreover, if you have a double top structure, I've seen many people saying, okay, we've got divergent momentum. No, we're trading double top. When you have double top structure, you will always have a divergent momentum. Let's pick an example right here. Okay, this top and this top, nothing like a divergent. we're basically trading the same price, so there's nothing like a divergence in here, okay? Don't even dare calling this a divergence. Okay, now about whatever we could trade. Okay, the difference between the levels. If you want to trade, this is another thing. If the momentum somehow is relating to a 15 gap, 15-point gap. Remember, momentum is giving 100 to minus 100 levels. If you have less than 15 points between the previous top and the second top, don't really consider that as a divergence. It's most likely that the momentum reached out the nearly the same area, and you really need to have really easy to see visual difference in here. As an example, in here the momentum went to, let's say, 60 as the top went above 100, which means that right there you have a valid divergence. Yeah, but to be sure, I'm going to point that question so you guys might be seeing it. Various RSI divergences are really depending on who you study under to be fair. It really is true. Believe me, through my years of experience, I've seen so many bullshitting around the divergence. So many people trading this the wrong way, or really follow the simple rules I've been giving there. If the momentum is not making at least 15-point difference between the two tops, no divergence. If you're trading the same price level, no divergence as well. If there is less than 10 bars between the two levels, no divergence as well. Okay, these are the rules. Need at least 10 bars to consider this as a divergence, and we really need to test two different prices. Otherwise, no divergence. You can have what we call short-term divergence instead. So that's what we have right here, okay? This is somehow a short-term divergence. We're trading the same price area, but simply we're making some kind of excessive price movement in here, not confirmed by the momentum, and that is totally different from a divergence. It's simply the price made an excess right here to make some kind of wave 5 push, reaching out to the resistance. But as you can see, the resistance price was right here. We kind of entered the resistance area in here, pushed to divergence in order to get to the level, and the level was the one you wanted to short. But this wasn't a divergent signal, okay? Or real... Yeah, kind of could be considered as one because we had 10 bars, okay, but really is a borderline right here. Could be considered valid, but nah, I'm not really a big fan in here, okay? Not a big fan, but yet could have been traded. Could be considered as a short-term divergence. So whenever you have this, you can eventually trade that, but those trades really need to be secured really fast. Because high level of risk, because the divergence is not really the pure truth of a standard divergence. So you want to have, once again, as we said earlier, the less quality you have, the more risks get in, so the less risk you need to put in your money management. If you trade this, if you traded this back then and use that as a divergent and as a trading entry, once again, might want to lower the leverage on the trade entry or tighten the stop loss to reduce the potential risk, the loss that could come out of simply you being wrong, okay? Let me give another example right here. Really nice bullish divergence, okay? Trading that support, really nice bullish divergence, okay? Really pure and simple. Momentum's not confirming the breakout, the breakdown to the lowest support. We're really testing two really easy to plot levels. Okay, level 1, level 2. Okay, no problem. Testing 1, retracing, testing 2, at least 2 bars between the two. More than 50 points difference, 2 levels traded. Totally valid divergence in here. Okay, are we good to go in here? We terminated. So we're going to stop the recordings just before reaching 1 hour live. Thank you guys for being here. We'll meet again live in Tuesday. There are no records of the Tuesday session, but on Tuesday we make technical analysis and answering live questions like we did right now. So we'll meet again live in next Tuesday. We'll make another educational content video on next Thursday upon the new vote you will have made, because once again you are voting for what you want me to talk to you about next week. Goodbye guys.